Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. We are now discussing perhaps one of the most important stocks in the Nifty, definitely the king of the infrastructure space, L&T. That company announced a 9,000 crore rupee buyback yesterday at a maximum price of 1,500 rupees a share, well above the current ruling price. Joining us now is Mr. N. Subramaniam, Managing Director and CEO of Larsen Toubro. Good morning, Mr. Subramaniam. Thank you very much for joining us. That announcement clearly stunned the market. It enthused the market. Your investors sent that stock up about 2.5% yesterday. Now, what hereafter? The expectation in the market is that there could be more buybacks because you are going to be seriously in the money, what with several asset sales lined up. Is that how we should understand more buybacks to come, a regular feature of L&T?
Good morning, Lata. Good morning, Sonia. The reason and the rationale behind it is multifold. The primary reasons for the buyback is, one, the company, as we look into the space that we are in, which is essentially EPC infrastructure projects, heavy manufacturing, and the service area that we are predominantly in. It reaffirms the faith in what we see ourselves in as being present in India as a country. So the reaffirmation of the fact that we feel the economy is doing well. We feel good that there are plenty of opportunities, and with the backlog that we have and the kind of reserves that we have, and as we look into the future, we strongly believe that the company's ability to burn the backlog and make money out of it is a reaffirmation of faith in how we look at it. Sure. The third most important point is that as an organization, we seem to be moving away from a heavy asset model that we are in, the heavy investments that we have made, especially in manufacturing area, heavy assets oriented manufacturing area, and the concession model that we had into some kind of an asset light model. And therefore, the money that we generate from our EPC business is sufficient enough to look at the capex that we need, is sufficient enough to look at any mergers, acquisitions, or any other investment that we need to make. And with having done all that, we'll still have some surplus money with us. And that is what we have sought to give back to our shareholders as a buyback. And in our view, it's an overall vindication of the fact that as a country we are doing well, as an organization we are doing well. It's a reaffirmation of the faith that we have the ability to do well, and therefore why not return back some of the cash that we have to the shareholders and thereby proclaim ourselves to have a stronger future.
Okay, well, that's the rationale for the current buyback. What people are suggesting and expecting is that this could become a regular feature, or at least there could be a couple of more buybacks because you are in asset sale mode.
We are not in an asset sale mode, Lata. That's a very strong statement to make.
Okay.
What an organization like ours does is we have invested in certain projects and in certain manufacturing areas. As you are aware, predominantly we are an EPC background company. Some of the projects that we have done, once the project has been implemented, has matured, and is now in an operation mode, we don't have a purposeful idea to keep these assets with just on a perpetuity basis because we are not in an expansion mode in that particular area of business.
Okay.
Our idea is to do a project, make money out of it, reinvest it in similar projects elsewhere. So some of those investments that you made on a project mode are now available in that shelf where we had to monetize it and get the money out of it and reinvest it in some other area or some other projects. We look for opportunities, and L&T tries to be in areas where the country needs us to be in. And therefore, it's a model by which in perpetuity gives you an investment mode and a return mode and an investment mode and a return mode, and that's what we look at. And therefore, to term us as an asset selling mode may not be the right way.
Okay.
It's a fact that some of the projects are getting matured, and maybe some of them are getting matured at the same time, and we look to house them in good places where maybe the potential buyers see a brighter way to take it forward and invest more in such business, whereas we look at to monetize the money to invest in other businesses.
Okay. Subramanian, good morning. So over the next 18 months, what could the quantum of the asset sales be that you're looking at? And what percentage of that cash could realistically be returned to shareholders?
No, that's a speculative question. These are decisions which are made professionally in a proper discussed forum. As you have it now, you know what we are doing, and that's what it is at the moment.
Okay. If we are looking at the return ratios as well, what would this buyback do to the ROEs, for example? I mean, currently L&T is at about an 18% targeted ROE by 2021. What is the ROE now? And over the next 1 to 2 years, where do you see it?
Excellent question. I think one of the major purposes of doing the buyback is also to increase the return on equity or net worth. As you can see now, we are a fairly heavy net worth company. The business that we are in, predominantly EPC business, is a tough business. The margins are not, let's say, like some of the other sectors. We strive hard, we work hard, there are contracts which are risky, and we have to perform it within time and cost to make some money out of it. The net result, as you see in our profit and loss account, is between 5.5–6.5%, and that's where we are. And we don't see any reason for it to come down or go up drastically different. Of course, we move on to more asset-light model, we move on more to a service-oriented business. There's a possibility that this margin will go up, but that will take some time, maybe another 2 to 3 years to do that. So having said that, the net worth continues to grow up because the reserves keep building up. So one of the ways is to not only look at the numerator, but also to look at the denominator, which is net worth. And by giving back money to the shareholders, you're keeping net worth within a particular range, and thereby the ROE increases. My guess and the way we look forward with optimism is that the ROE is on track to become 18% in a year or two, and we'll hold on to that way as we see it.
Okay. Mr. Subramanian, I don't know if you would be privy to this. Will the employee trust tender in?
Well, I am not a member of the trust. Okay. The trust is an independent body which takes its own decision, and let them decide the way they need to decide.
Okay. Well, when you made this decision of giving away 9,000 crores or buying shares worth 9,000 crores, have you taken cognizance of the working capital requirements? You don't expect any tightness there, would you?
Working capital is always a tight situation, right? So we have to fight hard to get the money from the customers. That's part of life. But I think all that consideration has been taken into view before we embarked on this course, yes.
Okay. There was one asset sale to Schneider. What is the status? Is the money in?
Yeah. No. As I mentioned to you the earlier time we met, Schneider is an MOU and an agreement that has been signed off. Now, the process is on. As you know, we need to get very many statutory permissions, including the Competitive Commission of India's permission.
Okay.
So, matters now at an advanced stage, and the transaction is at the moment progressing in a proper course, and we hope that everything would be positive in a short matter of time.
Okay. For FY19, you had guided for a revenue growth of 12 to 15%. For FY21, you were looking to double your revenues. Over the past many weeks and months, we've seen a massive infrastructure pickup, or at least that's what a lot of the industry veterans indicate to us. Would you at any point look to perhaps scale up your guidance?
No, Lata, Sonia, let it remain where it is. We don't see anything massive happening. Things are positive. So let's remain positive, and let's hope that things go in the same manner. Please, this year is a little difficult year from an overall point of view. We have 3 to 4 very major states which go for elections. We have, during the financial year, the general elections which are due. And as is the norm in a truly democratic country, the governments are not allowed to take some decisions during the process of elections, which is a correct thing to do. And therefore, having said that, when 4 major states and the country by itself is going for elections, there will be some delay in decision makings. And these have been factored into the guidance and the numbers that we have put forth.
Okay.
So one needs to be realistic about the situation because things don't work as we want sometimes. One small public interest litigation, some right-of-way issue, some major financial dealing with multilateral agencies not yet settled. Projects can get delayed by a few months, so one needs to be cognizant of that. We have factored all that in the guidance that we're given, and right now we stay the course as we see it.
Okay. Actually, Mr. Subramaniam, this may probably be an optimistic interpretation for you. I'm reading a Jeffries note which says that Larsen Toubro's order flow rose 27% year on year in 1998, which was after an unfavorable election outcome. So there are people who believe that you can go on come, high tide or high water, as the case may be. But are you getting a stronger flow from the private sector, which may be somewhat insulated from election ups and downs?
Not yet, Lata, because as you are aware of the issues that are going on with the private sector, much of the private sector capital flow today is going towards buying already established assets in various forms, NCLT included, and much of the capital is getting into that to revive some of these assets. As such, greenfield investments are still hard to come by. It is happening in certain sectors which are not present. Maybe it's happening in telecom, it's happening in retail, it's happening in some of those other areas. But as such, on the capital goods sides, on the factory sides, on the concession side, we don't see it happening so much, and therefore I would still hesitate to say that private sector investment is flowing the way Jeffrey is indicating it to flow.
Okay.
No, they were just drawing a parallel of, in 1998, the elections didn't stop you. But what about international orders?
I hope what you quoted there remains true, and we are able to get to that. But
oh yes, for the country's
the
sake.
facts as we see it.
For the country's sake as well. Mr. Subramaniam, what about the international order book? A large part of the people you service, for instance, Middle East, has actually been doing well with a steady or at least a stable set of crude prices. So should we expect the international book, order book to do better this time?
See, oil price being at 70 is good from the Middle East point of view. So we've seen some revival of orders, and we've seen some projects which are not going forward earlier to move forward. But at the same time, one should also realize that Middle East was not in good shape for nearly 2.5 years. So there are many companies there which are also hungry for orders. Second, Middle East situation has also changed. Earlier it was a lot of competition from Korean and maybe the Western firms. But today the competition is from more hungry Turkish, and sometimes we even find Chinese firms. Okay. So we got to assess the situation as we move forward. And therefore, I would not place too much credence to the fact that since the price of oil is good, you're going to boom in Middle East. There are practical issues there. Some of the countries have enhanced oil recovery, and therefore the amount of crude that they're producing is not as much as they used to do. Some of the oil is in more difficult areas, and therefore the cost of production is higher. They also run a very highly what you call a social equilibrium kind of situation there. A lot of money goes into subsidies and providing the population at large, and therefore with whatever money is there, we look for a stable situation in Middle East, but I don't expect a situation where you see it sort of booming off.
Okay. I also wanted to ask you about some other assets. I mean, just coming back to the asset-light model that you're looking at. You spoke about the sale to Schneider. In this calendar year itself, Mr. Subramaniam, can we expect any other asset sales, whether it's the Nabha Power stake sale, a stake sale in your tollways project, or even in the Hyderabad Metro? Anything that could fructify within this calendar year itself?
Sonia, even if you want to look at it, these things take discussion time, and then the process of statutory approval. 6 to 7 months is a very short time for effectuating any one of these. Maybe thought process would be there, discussions would be ongoing, but to ensure that the sale would take place and money would come is, for me, it's a little difficult situation to look at. But few other things we are under discussion, and we'll see it as we go by.
Okay, Mr. Subramaniam, I mean, one doesn't want to sound insensitive. There has been a huge problem for the state of Kerala, but that will also mean more reconstruction. Has anyone approached you?
First thing we are doing, Lata, is that the Chief Minister himself personally spoke to me. So the company is contributing a fair amount as we deem it fit to the government of Kerala, but there is an unprecedented situation there. And as an organization which is very sensitive to such matters, and as we have been doing it in the past in other states where there have been calamities, we are making a substantial contribution to not only to Kerala, to Karnataka, to Uttarakhand, and to I think Himachal Pradesh. So we will be doing that in the next few weeks, and that's how we look forward. Reconstruction or such is not something which we look at when the state is in a present state. If there are opportunities that present itself, we'll look at it. But in terms of providing certain basic facilities, etc., from the human suffering point of view, we are fully assuaged of the situation, and whatever we can do, we'll try to do that.
Okay, so it's great to hear actually about the contribution that L&T will be making towards the relief efforts. We hope things progress there quickly in terms of, the rehabilitation, etc. I just had one last question.
It's not only L&T, but also L&T employees.
Sure.
Sure. Yes, that's what I meant. I just had one last question. Your views were a bit somber when it came to the investment cycle picking up. I mean, you said that there's no massive pickup in terms of infrastructure. We are also hearing that although there is a pickup in infrastructure activity, it's not materializing into higher order inflow for companies. Is that true?
I would say that in the sense there are opportunities. We have been fairly successful in this year so far. We hope to continue the trend. There are some major projects which are being initiated, and we hope the tendering for that will start soon, and we hope to be successful in that. And I'm reasonably positive. That's the way one should look at it. Yeah.
Okay, so you basically maintain the guidance that you all gave for FY19 and FY20.
Yes, ma'am.
Okay, all right. On that note, sir, thank you very much, Mr. Subramaniam, for joining us. It's a giant buyback, and your investors are extremely happy. Thank you very much indeed for joining us. Well, we have to wrap up on Bazaar on that note with the news that things have become a little quieter. It's flat, but a little bit of red on the screen. So I think there are going to be long and short ideas coming your way on Chartbusters. Stay tuned.